Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is the end of the quarter, and I don't know the exact figures because I just stepped off my trading desk. I'm not a calculator. I'm a trader, but I think most things ended sort of flat. You know, the Dow might have been off a little bit, S&P up a little, Nasdaq up a little bit more, and I think the Russell was, probably one of the stronger ones with the mid caps, but nothing so blockbuster, especially if you take into account what happened in Europe and Asia. Those were the blaring performance areas where we had some ETFs that you could have held on and made some performance with. But anyway, so for our quarter, it was pretty much range bound. That's what happens when you're in the sixth year of a bull run and you have basically no more POMO. You don't know if a strong dollar is going to affect earnings, or you also don't know if good news is good news. Today we had a huge consumer confidence report, and people are like, oh, do I buy good news, or does that mean rates are going up and the market can't handle a 0 to something rate? Or am I looking for bad news because then maybe they'll keep it longer? So the market's in a little bit of identity crisis, it feels like. So with that said, you kind of got to take it day by day, especially as an active trader. You have to figure out what the composure of the market is and how to act and have a plan to act accordingly. So you look at the chart here of just say the spiders, okay? You talk about the range. So this is the low end of the range. Okay, this is 198. Here is that red dog reversal that ignited that move, if you remember. Okay, above the downtrend, above this to the high end. This by the way, this bar does not exist. It never got that high. So here's your high end of the range. So if you could take it a step further, right here looked as if perhaps you could digest and take out the high end of the range by drawing an upper flag. Will this upper flag hold to show commitment to then break above that, and what happened was, a small little topping tail. And the reason why I don't like to buy, or just on a down day, because you never know, what's going to happen next. And when we failed here, some stocks still looked all right, but if you were playing for a potential breakout of this bull flag to this commitment of that Fed day, you had this happen, so that I guess was your, extra little green, red flag to get out of the way, especially when it opened up and broke below the low here. And then here, if you're like, okay, I'm going to buy here because I just think it's going to hold this area. This is like the 1/3. This is where it broke above. It has to hold. Then that bar probably puts you out of any positions, because to hold, from here to here, I know I couldn't do it as an active trader. If anything, someone should have, gotten short there, or maybe short here, or who knows. So then you had this move, from the lows. So looking at the mid end of the range, because that's where it is, right? Here's the low end, here's the high end, here's the mid end. All of a sudden, yesterday you had a big gap up on the Monday. It looked as if there was going to be some dressing. You had a big gap here to trade against, right? Because that's what we do. We trade against levels. So that level for the spiders was 206.96, which is where we opened. So I know for me, I came in just long some spiders for continuation. I sold some into the strength in the close because that was the resistance. Took some Apple because it closed well. And I had some Twitter, calls, and I was trying to figure out what else there is to do, because there wasn't that many constructive looking patterns. The banks closed okay, but it's hard to trust them. Some one-off names look decent, but I would rather be a trade. So in this area, I'm like, let me just take, let me be a little risk off and see what's next. So to this morning, futures were down, and the spiders basically opened right at the gap. So at least, they didn't start down 13 handles and go down 25 handles. It started down like 13, 14 handles, retraced half. So you could have bought more spiders and then saw where we stalled and traded out of it and salvaged it, which is what people on the VTF saw me do. Or you could even waited for the H-cell setup pattern, because the spies gave you the perfect H-cell setup where, open lower, came back up, over, broke below the low, and then pressed lower. I'll get into that. And that could have also been your stop area. So you look at the chart again of the spiders just to show you how to navigate, and that happened. So the question is, where are we now? So, we couldn't get back above here, broke below this pivot. This pivot was 206.97, which we spoke about, which I listed the chart. So some people are probably going out short, saying we'd closed in the lows, and, that's their thesis, a high, lower, high, lower, high. Some people probably went out long and said we have new money coming in, first day of the month, the quarter, we probably gap up. for me, I'm flat equities, and some leftover, options, which I'll get to. But to go to the 5-minute chart of what transpired, all right, so you want to be calculated, right? So for me, I'm the same. This was the start. This was the gap. Here was where we opened up, 206.99. We came into 206.97. So once we bounce off this could have been, I'm going to average down, okay? And then here was your trend to the upside. Went as high as 208.06, almost filling the gap, okay? And in the radio, I was like, I think we could take back at least half the down open. Not sure if we can go green. And then from here, I think some guys were actually shorting here. I think I was shorting here and I covered a little too quick. But you could have at least gotten out right there. This would have been my out if I were you. Okay, if you were, if you averaged down here and you wanted to see the trend from the morning, here was your trend from the morning that somewhat broke. So if you bought versus that low, even if you bought like right here at 207.40, you could have made 50, 60 cents, to salvage your spider trade. And then that could have been your out. And then you could have waited till later. So later, I know right around, here is when I came back from the gym. It came all the way back up to this, okay? And I think some of us, including me, where were we? No, actually, yeah, this is where I think I know I was testing some just in case. Like here was, this downtrend. I'm like, let me try a little long versus this, and then on this wide range bar, I get out of the way. And I probably should have, got out and flipped, considering the size of this engulfing bar. But now, if you want to talk about an H sell setup, okay, because that's what you do in bear markets or negative type tapes. Here is your pull to the downside. Okay, a big gap down, and those that pressed this gap down probably got hurt. You wait for the rally up, okay, and here was the rally up. Maybe you're a little conservative. You don't want to do it there. Came in right here, made a lower high. That could have been your short. Okay, or you could have waited for this to short. So just say maybe you shorted into this, said I'm going to short this versus the morning high. You had a good entry there. You had another entry maybe here, and then once it broke the low of the day, the bottom of the H, because here is your pull and here is your H, that's your additional add. Okay, some people might just wait for this to happen, but then you're kind of in jeopardy of it holding the morning support. But if you short here and you short here and you have a good average cost, you add there, boom. You then just had a move to the basic lows, and it was down after hours, so you had your H sell setup pattern. But you also had, if you were long overnight, a little bit of a retracement to get out and salvage the trade. So that's how I came into the market thinking today, can we salvage the trade, and will we hang in there? Will there be commitment? And now I think it's it's neutral to negative, and there are definitely good arguments to be short and some to be a little long, I guess. What did the Russell do today? Let's go to the daily chart. Russell acted better, okay, which it's been acting better this year. It held above the gap, so inside range here. So see what happens here next. That's something to watch. That's giving you, okay, you want to be, win for the bulls, win for the bears. Well, this is a win for the bulls. You go to the IWM, and we just did that, I'm sorry. You go to the mid caps, MWY. Okay, mid caps also win for, win for the bulls. But again, there was a little false sense of security there the last time. So see what happens here. It's still holding the gap. So that's 2 wins for the bulls. Then you go to the bios. What did you do? I would say this is a win for the bears. Right? This was your sell the strength. This was you break the 8-day moving average. This was your covering the hole into the 50 or maybe buy. Then I listed the chart saying you're probably better off selling into this area versus buying, and now this closing the lows and below the prior low. So this is showing some continued weakness. So that would be like a win for the bears. And then the Qs totally filled the gap, showing some weakness like it's shown. This didn't even reclaim half of this bar like some of the others, so filled the gap, closing lows, win for the bears. And, so at this point, as I said, there are some reasons to be short and reasons to be neutral and reasons to maybe a little long. It's all up to you and your thesis and your time frame. Now, as far as stocks are concerned, I came in long Apple, thinking that maybe Apple could go green, and it did. And my problem was I thought maybe it can go a little green and a little bit more, and it didn't. Okay, it actually got negated again at the downtrend. That's why you sometimes anticipate or you wait for confirmation. And this one, got to the highs and failed, and then now almost engulfed this entire day. So what does that tell you? back to a choppy mess. That if you are an active trader, no reason to be long overnight except if you think it's just going to be like green, red, so next I guess should be green. But you probably also have some time for that. So it failed here. Okay, now here's the 50-day, so you'll see if that continues to hold. Earnings are until I think April 22nd-ish, so you still have time here. So maybe we'll see what happens here tomorrow with new money for the month if it could finally break above this. But this line is still a better, I guess, short or a sell than a long. You look at the first 5 minutes, it gave you a way out. It just you had to be freaking quick. For me, it went positive. It looked as if it was going to take this out. The market was coming up, and I was buying a little bit more here, and that hurt. So then for me, whatever I added, I sold right around here. There's a huge wide range bar. And then, I think, right onto this move up here on this is when I got flat apple, or somewhere around there. You had this little trend from yesterday. You had this area. I think I bought it in here, this 124.90, okay, which you could have also used as a stop. Instead, I think I used this before, leaving. I was just like, you know what, this is not working, and I'm out. So this was my ad. This was my get rid of my ad. This was, let's see what's next here. Done. Okay, and then some people might have even, said I'm going to use this H sell setup for today, where you come in, go across, short into this, short versus that little bounce up, and then maybe add when it breaks the morning low, and it will end up giving you, a trade down to 124.45, which is still 60, 70 cents as an active trade in the end of the day. So now back to Apple, still hanging around, still looks better than some other things, but no reason to be obsessively long, I guess. Twitter, was spurty. Twitter gave you a nice trade off the bat where went from red to green and then pushed up, but didn't have enough power to stay up. Some people think it was because of a deal with Google. Who knows? All I know is it's still holding this area and still has one of the better patterns. It's above the 8-day, let alone the 21-day. And if you look at the first part of the morning, it did happen quick, where this was your down move. Some people were already buying it, pre-market or whatever. But anyway, first move sideways, continued, and then wound up making highs on the on the day. And then I guess if you drew a trend like this from here, and you were thinking maybe it can continue, there's your flag. Once it broke this 50.89, that trend from the morning changed. So perhaps you took some off, held a trailer, and then it came in and then bounced off it. So this would have been your spot to say. I think that's when I came back and I said, oh, let me try some Twitter here because, I have options on, but I missed this move. Tried it there, and then I was like, my stop is here at a 50.65, and boom, that was your stop. So red flag number one, try it, for a bounce, and rolled over, and you had to get out of the way as a day trade, and then it wound up closing really weak all the way on the lows. So that was your strength and relative strength until it broke right there, came back up, lower high, get out of Dodge, and some people actually even shorted it there. Facebook also, wound up, filling the gap at least. So for those people who were long it, it came down, put you low, and kind of matched the prior session's low, came up. Wasn't a great trade. I know I made a little bit of money when it went from red to green, and then pretty much failed at the prior resistance. And if you had this as your stop, like 83.70, you saved yourself some pain into the close. And that's what you have to do in a neutral to bearish, I guess, environment, or even a neutral to neutral environment. You take your trade, and then when the trade kind of changes, you get out of the way. And that pretty much is what you had to do. And I guess some people looking back over maybe 2 days, if you look for an H sell setup, here's your pole, and here's your H into some resistance, sell some, and then it starts to get weaker, and that's your press. And some people, that's what they do. Let's see. And then, across the board, it just was a choppy mess. Google, really no reason to own it here. Looks like it might break support. Netflix, nothing going on. This broke that momentum area up here, and hasn't really been good since. Okay, Tesla, we talked about resistance at 193, 194. That's where it went and failed. I still think it's broken. Back in the day when Musk would say a new product or new something or other would be up all day and squeeze the living you-know-what out of the shorts, but it's a broken name. Doesn't mean you're going to be able to short this with ease here, but still I wouldn't be chasing it. So it's still in that, in that downtrend. Some of the banks, what did they do today? JP Morgan, I guess that would be on the, a little bit of a win for the bulls that it didn't fill the gap like some other things. Still holding in there, see if that can continue. So if you need to be in something, maybe, if we do turn up, that's something as far as one of the banks. Citigroup, no. Morgan Stanley, still just monotonous and closed on the dead lows, filled the gap, so no real power there. Juno gave you a move, but also shows you that you have to take your move. I know I was playing it and Sperling was in it early and thought maybe you can get some momentum above 61, 62. It did get to 65 or 64.55, but then reversed, so you had to sell that strength, especially after coming from here 4 days ago. So, to make a long story short, the market's tough. Okay, the 2015 first quarter, very range-bound trade. You've had to buy them when they look the worst, which is good for the red dog reversal because of the false breakdown. So you have some ways to play that. Same way, sell them, I guess, when they look their best. And you could see that with the reverse red dog reversal, and then not trade or overtrade the monotonous middle-tiered noise when it's in the middle of the range. Just take your trades. At some point, maybe that changes, and maybe that's with more clarity with earnings, the dollar, rates. And we'll see. At this point, you just got to control yourself. And if you didn't have a great quarter, what you should do is go through, all the names that you traded and look what you made money and look what you didn't make money in, and then figure out why, you maybe harped on stocks that were out of play and you lost too much money and kind of change that. If there's things you think you can handle, if you think you can trade Priceline and, because of the ranges are so big, but you see that you lose all this money because the prices are so wide and there's not a lot of liquidity, you know what, maybe you shouldn't trade Priceline. Or if, you did the same thing with LinkedIn because Facebook and Twitter were strong, but LinkedIn has been a choppy mess, then just make some changes. Not saying every quarter is the same, but trying to figure out what makes you tick, what you're good at, and what you're not. So this way you could perform better next quarter, and hopefully there'll be better action. If there isn't, you better figure out a way to make money. Otherwise, all of a sudden, the cash flow you tried to make isn't going to happen, and your significant other is going to be like, pull the plug. I've seen it happen to a lot of people. And if you're an investor, you know what? You've enjoyed major, major gains. Keep putting monthly money in every single month. This will help your average cost, and at some point, whether it's this year, next year, we should make new highs, and your average cost will be continue to work out in your benefit. And the lethargic tape right now doesn't make a difference to you because you're longer term. Whether you're 30 right now and you have 30, 40 years, I don't think you have to worry about it. Or if you're 55, you're probably good too. If you're, if you're 70, maybe, take some money out just in case we do have some kind of, pullback that, weren't unexpected. But it's all age group, it's all time frame, and it's all what makes you tick and how, what style you want to perform from. So tomorrow, Jill Malandrino, my old school friends, coming in because Brittany's out for 2 more days on vacation, and we'll see what she has to say. Have a great night.